I'm joined by Giada Giani. She's a European economist at Citigroup Global Markets. Thank you so much for speaking to us. So I actually wanted to start by asking you about Portugal. The Prime Minister has resigned. What are the economic and financial risks of this political vacuum?
Well, definitely are quite major, given the fact that political instability will definitely be higher than what we had just up to yesterday, and that's add up to the economic weaknesses and banking fragility in Portugal. So obviously it has major implications for Portugal. Now, we're still not sure whether Portugal will be asking a bailout package right today at the EU summit. I doubt that this will be the case. The current Prime Minister, he's still Prime Minister, but obviously is Prime Minister of a caretaker government, so he does not probably have the authority and ability to negotiate a full multi-year economic adjustment program as Ireland or Greece did last year. So I think that the bailout package for Portugal is definitely looming, but probably not coming as soon as this weekend.
And what about the size of the bailout and indeed the terms of such an agreement?
Well, you know, there have been various figures circulating about the size of the bailout. Obviously, what needs to be taken into account is not just the funding needs for the sovereign over the next, let's say, 2-3 years, as much as they've been doing for Greece and Ireland, but also the size of the recapitalization needs for the Portuguese banks. And in that respect, we don't know, and we don't have any precise numbers. It could be anything ranging from 10 to maybe 50 billion. So I would guess a package of the size of between 80 and 100 billion euro could be a feasible number to be put for a bailout package for Portugal.
And what about the conditions that would come with any such bailout? How much of a risk are the reaction of trade unions and others to structural reforms that may be imposed?
Well, definitely. I mean, we've already seen a significant scaling up of opposition within the political parties, but also within the public opinion against the set of measures that the government has already announced 2 weeks ago and presented with the backing of the European Commission and the ECB at the 11th of March meeting of the European leaders. These measures included fiscal austerity measures, but also structural reforms in the labour market, in the pension system. So there will be a broad range of issues that will be covered by the economic adjustment programme. And also on top of that, as I said, there will be the key issue of how to restructure the banking system. We know that Portugal has one of the highest level of private debt to GDP ratios in the euro area, and that means that banks are largely exposed towards the economy and towards the domestic borrowers, and so that means that they will need to deal with the situation of the banks together with fiscal austerity measures.
And speaking of the banks, I mean, despite the focus on Portugal, a lot of people saying, look, the real concern here is Spain, and now Moody's downgrading 30 Spanish banks. Where are we going to go with Spain?
Well, Spain, definitely. I think the key issue for Spain remains the one of dealing with intern banks. Some progress, however, has already been made over the last year. The restructuring process of the savings banks have been proceeding over the last few months quite quickly. The number of banks have been reduced. The number of savings banks have been reduced. Obviously, the key issue at the end of the day is how much money is needed to make the whole banking system whole again. And
very briefly, Giada, how much might a bailout for Portugal impact Spain? Tell me about the spillover impact on Spain, given the exposure of Spanish banks to Portuguese government debt.
Well, definitely. There is definitely a repercussion that it could make the situation of the Spanish banking system even more fragile, because obviously what we expect, and what I think also the European Commission and the IMF would expect, is that the Portuguese economy is going to go back into a quite severe recession. And this is, to be honest, what has already happened for Greece after a bailout package, and also for Ireland to some extent. So I think that a recession in Portugal will severely impact not just on the Portuguese banks, obviously, but also to some extent on the Spanish lenders, which are most exposed to the Portuguese economy.
Well, thanks very much indeed. Great to get your analysis. Giada Giani, economist at Citigroup Global Markets.